On June 3rd, SpaceX quietly filed paperwork with the U.S. Securities and Exchange Commission that shook the financial world. This chart compares historical market debuts to show the scale of the filing. For years, Alibaba and Saudi Aramco held the records for the largest initial public offerings at $22 billion and $29 billion. The SpaceX offering is more than double that Saudi Aramco record, with a target raise of $75 billion. That target prices the company at a total valuation of $1.77 trillion. This puts the company's market value on par with the entire gross domestic product of several G20 nations. For CEO Elon Musk, the math is even more direct. Combining his 42% stake in SpaceX with his existing Tesla holdings pushes his net worth definitively past the 12-0 mark. We have historical records of immense wealth. Industrialists like John D. Rockefeller controlled massive segments of the early global economy. Yet no other individual in history has held this specific concentration of wealth relative to the modern global economy. When the SpaceX ticker, SPCX, hits the NASDAQ floor on June 12th, it will trigger the mathematical threshold required to crown humanity's first trillionaire. SpaceX has been building hardware for over 2 decades, which raises the question, why is a manufacturing company seeking a valuation larger than most countries? In a February 2nd all-stock transaction, Musk absorbed his artificial intelligence company, XAI, making it a SpaceX subsidiary. This combined network includes the Starlink satellite internet, the Starship rocket program, and Grok, the AI model competing with top research labs. This IPO offers exposure to an integrated network of infrastructure and artificial intelligence, moving the company's core identity far beyond its origins in rocket manufacturing. But the SEC prospectus also reveals significant financial liabilities, specifically a sudden and aggressive acceleration in cash burn. This line graph illustrates the company's recent financial pivot. In 2024, SpaceX posted a net income of $791 million. But last year, driven by infrastructure expansion and a heavy bridge loan, the company recorded a $4.94 billion loss. While those losses might invite pressure from investors, the company's governance structure prevents any outside intervention. This pie chart maps the distribution of control. Through Class B shares that carry 10 votes each, Musk commands 85.1% of the voting power, leaving public shareholders with a combined influence of less than 15%. This control extends directly to his own compensation. In January of 2026, the board granted Musk a new package of 1 billion performance-based shares. The vesting condition for those shares is unique in the history of corporate law. SpaceX must establish a permanent human colony on Mars with at least 1 million inhabitants. In this structure, standard financial oversight becomes a secondary concern. Public capital will fund Musk's interplanetary goals with almost no mechanism for shareholders to steer or halt his decisions. Even these numbers understate the total scope of the project, as the SpaceX IPO is only one part of a wider corporate portfolio. Musk has frequently discussed a final consolidation, merging the newly public SpaceX with Tesla. Combining the $1.77 trillion valuation of SpaceX and the $1.66 trillion market cap of Tesla creates an entity worth $3.4 trillion, dominating global internet, space travel, AI, electric infrastructure, and social media. This level of dominance across multiple global industries would operate under the direction of a single individual, largely free from traditional shareholder or governmental influence. The June 12th stock offering represents a rare moment in finance, the public funding of a multi-sector entity controlled by a single person, operating at a scale that challenges existing corporate norms.